Hi everyone, and welcome aboard. Thanks for joining me for Trading Buddies on this, the 22nd day of January 2024. Just having a little bit of trouble with the live stream. Won't be 2 secs, and I'll get that happening. It was supposed to be happening, but it's not. I think it's just about to kick into gear. So I will restart in just a tick. Still not getting the message I need. Okay, we'll press on regardless. I can't do any more than I've done. As I said, welcome aboard. Good to have you here. Right, let's get stuck in and go first of all to the gold chart. And there it is. If you were trading this last week, you should have had a really good time because I think it had 4 out of 4. Sorry, guys, I've just got a very, very bad control panel today for some reason. All right, we should be able to get by with that. Yeah, let's first of all investigate today and see what we want to do. Righto, the high of the Asia session is here. The low of the current session is here. And that doesn't look too bad, actually. DR1's here, DS2's here. What's our risk? About $13. And our reward's half that there. And a bit, oh, no, it's not right. Let me get that again. Half to the high side and about, oh, what's that, 2/3? About 2/3 to the downside. Yeah, not real sure whether I want to take that or not. What else is hanging around? There's only that high. That high there, or pretty significant too if you have a look across here. The low, DS2, it's got to go through these two lows here. Okay, I think we'll go with it today. We'll go with it today. It's less than 1-to-1, so if you're not into trading less than 1-to-1, then I would not be concerned about this trade at all. I've got a funny feeling we're in the wrong show. Gary, I can see you're in, but I can't see anybody else. That's weird. I assumed you logged into the same old link, so I'll have to assume I am in the right show. Interesting. And there's nobody in the waiting room. All right. Okay, will we trade this or not? Below DS1. Actually, I've changed my mind. No, I don't want to trade into that. No. I think Monday's a bad day for this trade. Really do. But let's go and have a look at the last week's, which were Friday, Thursday, Wednesday, Tuesday, Monday. Right, so Monday was here. There was the low of the range, that bar there. And there was 9 o'clock bar. There was the high of the range. So you would have been, and we decided not to take this trade, remember. You would have been taken into the long and you would have been taken out of the short. The next day, the high of the range is there. The low of the range is there. Would have been a cracker. That's Tuesday. Wednesday, high of the range there. Low of the range there. This one. Taken in. Another cracker. Thursday, low of the range here. High of the range. Whoa, gone way too far. High of the range, there's 9 o'clock there. So there's the high of the range. Wouldn't have been taken into the short. You're taken into the long, had to suffer a little bit of grief, and then bang. And Friday. Friday, low of the range here, high of the range here. So you would have been taken in there, and there would have been a DR1 there for sure. So yeah, 4 out of 4. If you chose not to take the Mondays as we did, as we are doing once again. So I think maybe we should have had this show on Wednesday or Thursday. I don't know. Anyway, it is what it is. Now gold, let's have a quick squiz at gold, just because we can. And I'm still a bear, but no way in here at the moment. Got to see a retracement like that. Beautiful, beautiful bar, that one. Back in the range, retest the top of it. Reversal bar, game changer bar. Away she goes. Hi, Paul Pete. How are you, mate? So yeah, got to wait for pullback on gold. Now, updates. Last week we were in dollar CAD long. We entered down here, you'll recall, and we hit TP1 here. I think it was here. Trailed our stop thereafter, and I can't remember where the stop was. Maybe here somewhere. So the trading stop got hit, but decent trade. Looking for another entry on that one, and the only question in my mind is where does it rally again? So where's the pullback area? Few thoughts on that. Maybe there, which would give us an inverted head and shoulders virtually. Very skew if in the neckline region, but that area there looks interesting to me. This area here is also interesting to me. So there's a bit of a cloud of a price there, if you like, looking for that retrace on dollar versus the CAD. But that is where I'll be looking to buy dollar versus the CAD roundabout. Maybe last week's weekly pivot in that vicinity anyway. If I see a reversal bar there, game changer bar, in fact, that's what I'd be looking to do. Re-enter dollar CAD long. We also tried to trade Aussie yen long, short, and we entered here, got pipped in by the barest possible margin. We struggled with this forever and ever and ever, and eventually I decided to cut my loss. Can't remember the exact level. Would have been on Wednesday or Thursday, in here somewhere. So suffered a small loss there. Could be worse. I can't remember where my stop loss was, to be fair. It was either above here or above here. Can't remember. But anyway, we've cut ties with Aussie versus the yen. Can't get that one right, sadly. We also had Aussie versus the CAD. And Aussie versus the CAD, we traded the breakout, the dominator bar here. Those of you who know the slingshot. And we've had a bit of a rough ride here. Well, when I say rough ride, we've been in profit most of the time. I was away from the charts quite a lot last week. And had I seen this happen, this was a news event, I think, from memory, when I came back and had a look, because it happened real fast. Didn't take any profit. So I've got a target of 269 pips. So it's just a simple entry and profit trade, which is way down here. So I'm really playing the absolute range back to the bottom of the range, which is here. And I decided that I would not take any profit along the way. I think, however, if we see this level again and it struggles with it again, I may well take first profit at that level, which is around about what, 88.16 or something like that. Around about 88 anyway. That's where I'll be looking to take some profit if it struggles once again. But I think that happened very quickly from when I went back and had a look at it. That's Aussie CAD. I'm in today a new trade Kiwi versus the Swissy. Once again, we've been tipped into that by the barest possible margin. I'm playing a currency pair here that has been in the wars for the longest time, as has most currencies against the Swissy. Now, the thing with that is, at some stage, that will end. That downtrend, I mean, and blind Freddie could tell that we've been in a downtrend forever. Same with all the Swissy pairs, pretty much. So CAD Swiss, Aussie Swiss. I chose Kiwi Swiss because of two things, really. Number one is we're at the bottom of a range after a double bottom, and this is potentially a higher low. I say potentially, of course, this is the weekly chart, and it is a weekly game changer bar. Now, you know that weekly game changer bars, or any game changer bars, have to be in congruence with the major player, the big boss. In other words, what's driving the market from a technical point of view. And you would be very, very brave man to say that the bulls are driving this market. Simply not the case, and hasn't been for the longest time. So you couldn't justify trading this under my rules as a game changer bar for that reason. That doesn't take away from the fact that we've got a double bottom and a potential higher low, which means that that is a potential reversal. And again, I say it's only potential. It's certainly not a fait accompli. So we're trading that little bar on the weekly. And as I say, we've been tipped into that today already. Got the stop loss underneath the bottom here. Reason for that, but I'm not trading the candle per se, is that this may not be the higher low. We may still see a higher low here, 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 or even here. And if that's the case, we'll be in a fair bit of pain, but it can still reverse anywhere below that candle. So that's why I haven't put my stop loss there. At the end of the day, if this does reverse, forget about those few pips. It's these bunch of pips that I'd be looking to take, and we'd be scaling into that all the way, hopefully. So that's Kiwi versus the Swissy. Why did I choose it over Aussie Swissy is the question. Because this is a buyer bar here, right? Conventional wisdom would suggest that that would be the one to take. A couple of reasons. This is the second of, well, maybe even the third attempt at a lower high. It's much closer to the base, and I think it's also much closer to resistance than is the Kiwi versus the Swissy. And like I said before, we appear to be at support on the Kiwi versus resistance on the Aussie. And the way I worked that out was with, sorry, I've got the wrong list up there. Currency indexes. That's the one I want. So if you have a look at the Aussie, if you have a look at this level through here, this is the Aussie index, right? You can see, I don't need any Bollinger Bands on there, so we can get rid of those. Maybe I can get rid of those. There we go. You can see it's been strong support here, strong resistance here. It took the longest time to decide what it wanted to do here. Then it's come back below that level, found support, and it's come back to retest this level here, which is a resistance, in my humble opinion. That's the Australian index. The Kiwi index, very, very similar chart. But to my mind, this level here, which is probably a little bit lower, you could bring it down to here, I think, maybe, to my mind, is at support. So I think the Kiwi has a better chance of rallying than does the Aussie at this moment. So for that reason, I went for Kiwi versus the Swissy over Aussie versus the Swissy. And like I say, this is far from a fait accompli. It's a complete swing, if you like, at a reversal. But I've got good reason to think it can at least go to that level. That's why I've taken. So it's Kiwi versus the Swissy for me. Again, I think it's the third week I've had this on my watch list. This is the first time I've attempted to trade it. We'll see how we go. As far as anything else is concerned, I think Aussie yen's interesting. I mentioned that we're in a trade last week that that went pear-shaped, but we took a small loss on that because we cut our loss well before the stop loss. Why is it interesting this week? Well, you've got virtually, well, it's an odd shape at the top here, but you've got a structure as far as I'm concerned. You can call it a rising, pardon me, rising wedge, an ascending triangle, call it what you want. I don't care what I call it. To me, it's got a boundary. And whenever it's got a boundary, that's interesting to me. So price can break above it, retest it. That's probably bullish, or it can come back underneath it and give me a lower high, and that's definitely bearish. Don't have a lot of room, however, to this downside. So that would want to be not really on a, certainly not on a weekly chart, but maybe a 4-hour chart. If I saw a false break, pardon me, of this area here, I think I'd be, in fact, if I got a weekly pivot test and then a lower high in here, I'd be interested to take that trade down to that level there. I think all the Swissy pairs are interesting because, once again, they're showing potential for a base to be forming, but it's still only potential, certainly not proven. So it's early days on that if you wanted to get into those Swissy trades. The only other one I found a real interest in this week was Euro versus the CAD. And I think we've been talking about this for quite some time also, because it has been in a range. And, you know, I like to play ranges, and we last came off the top, so I'm looking for a lower high. I can't really say that that bar there grabs me by the, I was going to say short and curlies, I better not say that. But there is potentially a selling, well, it's a selling bar. Whether you want to sell that or not is another story. But what I can see there is a range within a range. So maybe something on the smaller time frames. If you've got a false break of the top of this range, you could then trade it down to the bottom, leave something open, and see if the bigger picture was going to play out. That's Euro versus the CAD. Don't want to trade it because I really haven't seen a rally, and that's what I want to see. I want to see a rally before I get that lower high. And the reason for that is, if it's rallying and they run out of steam, then my old adage is, if X doesn't happen, then Y generally will. So that's what I want to see. I want to see a failed rally, maybe at that level there. That would suit me to trade this short. But it's interesting for that reason. That's pretty much where I'm at. Ash, how you doing, mate?
I'm doing okay, mate. I've I had an IFP over the weekend, and it always takes it out on me. So
Oh,
I'm
no.
yeah, recovering a
You
little
did.
bit from a bit of a cold or something. But I think it's really interesting about what you're saying about the Swissy. I had a look at the end of last week just because of the as you say, the kind of base with the Swissy, but it was the weakest currency at the end of last week, but only just pipped by the the Kiwi as the weaker currency as well.
Yeah.
Which is interesting, and I agree with you about the Aussie. You know, I'm actually looking for Aussie pound, sorry, pound Aussie, I should say, long.
Okay.
Also, I will show you this as well. Now, I don't know whether this is uh, the best area, but I've just taken a trade in the FTSE as well with the, you know, off this triangle. And it might well be, if I just sort of, you know, this is a 15-minute chart. If I let's have a look at that on an hourly. You can see that there's just a little bit of support kind of coming in there. It might even be there. So we're kind of on top of this one here. So it might not be the best place, but I quite like the setup. You know, I like these runs when you kind of get 3 green bars and then that red bar coming to rest on the previous area of resistance. I like this as a setup. So I've taken it more as a setup, I suppose, than the pattern. And I've gone for a very conservative very conservative take profit, even though the measured move take profit. If you look at this triangle, measured move take profit is well up
Mm.
to this point up here, and actually that's a pretty good level if you were to aim for there, because we're getting closer. We're getting closer to the breakout zone. There's a little bit of inefficiency here with these. We like to see moves to the downside and then a retest of the area it came from, the area of previous support, and that's what happened. It came down, tested the previous area of support, and it became resistance, and then it's dropped. Hasn't yet tested the previous area of support, so this measured move off the triangle would actually be not a bad zone to take it out, but I have gone for the conservative view on it. You can see there's also a trend line kind of coming up here as well. So it does suggest that if this can get some juice, that it's up in this zone. There's a lack of data today, which might help. Actually, the FTSE's been badly battered, and it's one of the reasons that I think the Aussie is an interesting sell, actually, because I see the Aussie as the currency that's probably going to suffer the most. Now, incidentally, one of the reasons I've gone for the lower measure, the lower take profit, is because of what happened on Friday. It didn't get anywhere near the previous support level, and it spooked me a little bit today. So I'm just going for a little bit of a one-to-one trade just to kind of start the week if I can positively. The end of last week wasn't particularly kind to me as I took a long in the FTSE, and then it kind of just messed around. Look how low it came before it eventually settled out. It was a horrible bar, horrible day actually trading. So I think psychologically trying to recover from that, and I think the best way to do that is try and get some profit in the bank nice and early, and then settle down for the week. So yeah, I've gone for a FTSE long. And as I say, I like the pound. I like the pound Aussie. The pound was a little bit strange last week, in as much that as the data kind of came out and was a bit mixed. It kind of it suggested in early doors that it was going to be pretty strong, but then some other data came out and it suggested some weakness. But when you look at this, particularly on these longer term timeframes, this by all intents and purposes looks like it may well be through some kind of level, and there's only two touches here, so it might not be all that strong. Sorry, I should really do it off a broader picture, because we could be looking at that point there, where there could be some resistance. It might be just a little bit more shallow, but if we look at it along here, it's difficult really. But I was struggling to find the best point, or best place to put the trend line, and I tried to sort of like look for the most touches, but I have been struggling to see where the pattern actually is on this one. And if this is the pattern, then it looks like it's below, but there's nothing triggered yet. But I quite like it. I quite like this this pound Aussie. There's a trend line going up there as well, which kind of leaves us where we are. And I don't like the picture for the Aussie. One of the reasons I don't like the picture for the Aussie is the global concerns that seem to be.
What have we done wrong here?
Yeah, well, there's a few things about the Aussie that just suggest that it could be just a little bit weaker than the other currencies. Now, I know we don't look at this very often, but let me show you this as well. Is the Excel spreadsheet come up here?
Yep.
So if I look at this, on the Aussie, there was just a little bit of selling sort of like going into last week. This is the COT data. So the institutes look like they were selling and quite aggressively as well going into last week. Now it might be that they're going to find some base, relatively soon, but it just looked to me like there could be a little bit of toing and froing. Look at the difference here with the pound. This is the pounds buying last week, aggressive buying. So, as I say, you never know really with COT data, because it's such a lagging indication of what's happened, because it's Tuesday to Tuesday, and then we don't get it for another 3 days. But I quite like that. I quite like the way that that's forming. Aggressive buying on the pound, quite aggressive selling on the Aussie as well. This is a net, the sum of the net buyers and sellers. So that's also kind of building the picture for me. But what's going wrong? I don't think anything specific really with Australia, except for the global picture, and there's some terrible data now, even from the US. And I think that the big thing from the US is the jobs data, and the jobs data is continue to confound investors, because it's strong. It's we haven't really had a weak number as yet from the jobs data, but the unemployment numbers tend to be the last thing to go, because people don't really want to sack people. They for many reasons. One of the reasons is that if they if we're running a company, you and I are running a company, and we're running a bamboo farm, and we've got 5, 10 employees that go out and do all the kind of the roles to kind of keep the bamboo farm going, and then we realize that actually we haven't really got the money to pay for those people. If we're borderline, we're going to likely try and get through, because we know that if we don't, then when it comes down to rehiring, we won't be able to grow as quickly, because we're going to have to go through the whole process. Because the hardest thing in probably any business is the employment picture. So
yes, you bet. It is.
So companies don't want to hire, and it's not out of the kindness of their heart. It's just that if they don't, then supply then starts to get choked, and they don't want to get left behind. So they will do what they can to keep people on their books. But of course, when things break down so drastically that you just can't afford to keep them, then the labor market will show data very, very quickly. There will be a collapse in those numbers. But so far, we haven't seen that. But it doesn't mean that the picture is all that rosy. You look at what happened last week. If we bring in last week's numbers, if we look at what happened towards the end of last week, what were we looking at? It was on the 12th. I mean, you can kind of see imports from China. That's sort of something to look out for. Particularly with the Aussie. Look at these numbers from the UK. They're just sort of they're it was actually better than expected, and that's where the week started for the UK. But look at this. This is really what I wanted to draw your attention to. The dollar, PPI, so the producer price index, just some bad numbers here. Core PPI 0.0%. So that's really going to kind of feed into the CPI data eventually as well. So a bit of a lack of growth there. If we bring in, where's my? Oh, this is Friday here. Let's bring in the most recent jobs numbers. Same thing from the pound. PPI data negative 1.2%. CPI data. Now this is really sort of like where things change, because the CPI data from the UK was actually pretty good. When we sort of looking at inflation numbers here, average earnings came in at 6.5%, still quite high. Nothing kind of reduced enough, I don't think, to create any kind of huge confidence. CPI from Canada came in at 3.4%, so it's edging towards that 2%, but it was a bump up from 3.1. So there's a bit of an inflation sort of thing here. Here we see core CPI from the pound 4%, then that was from 3.9, so an edge up in the CPI numbers from the UK. But you look at this from Europe, it was in line with expectation and a little bump up, but it's still under 3%. So you got 4 to 3%. So the pound was looking sort of like it's still struggling. But this is really sort of when we start looking at what's going on in the US, because that's going to be the bellwether. Retail sales were okay, and if we look here, this is sort of like really where things start to change again. Look at that. I mean, it's just the jobless claims again were less, and this needs to change if we're going to get some genuine concern, and you know, because everybody's talked about recession for probably 1.5, 2 years, and the data is kind of suggesting that we're probably possibly already in it. You know, CPIs are coming down. When we see sort of some of the trade balances, they're also kind of like looking quite negative. The housing market in the US, housing starts negative 4.3%, you know, for this month, and that was from 10.8%. So we are sort of seeing that there is some negativity, sort of, you know, this is a noisy number, but that's not particularly positive. But it's the jobless claims, and until we see the labour market change, I don't think we really see huge selling going on with the S&P and the Dow, and maybe even the Nasdaq. But I think we might well see it in the currencies. I think we might see, before that happens, we might see, you know, with these growth currencies, just a bit of selling. And I think that's what's really happened to the Australian dollar over the last few days. The Swissie's the strange one. You know, we're definitely seeing a bit of a change in what's going on with the Swiss, and you know what's going to happen to that. But I do agree with you that when you look along the Swissy, look at the pound's rally against the Swissy over the over last week. But the Euro Swiss was the same, and the Euro wasn't particularly positive last week. It was okay. Where's the Euro Swiss?
Yep, up.
Oh, it's up, is it?
There, yeah.
That's the Euro pound.
Below it, right below.
Oh yeah, yeah. Euro Swiss got a decent kind of bid as well last week, and you could literally go across the board, except for this one. That was the interesting one. It did rally, but the Kiwi wasn't that you know, out of all of them, it wasn't that solid. So
it's one of the reasons I chose it.
Yeah,
it's because
I get it.
It appears to be lagging, right?
Yeah, it does. It does.
Now that could well be because it's as weak as you know what, but
yeah,
that's kind of it's kind of the way my brain works.
Well, we liked the
Not
CAD Swiss, didn't we, before?
Yep.
And this, you know, when we were sort of looking at the CAD Swiss a few months ago, it turned out to be really you know, a very positive market. But that looks good as well. The CAD Swiss, it looks like it's kind of through this level. Looks like it might have even, you know, possibly tested the area as well. I guess the only issue with these is, just as I was saying earlier on, that the setup I like with the FTSE, when it goes up and it tests the area it came from, this hasn't done it. And it might be that we need a bit of a run to the downside. Interesting, I saw that you had the deep yellow chart up as well. Is that TradingView you're using there?
Yes.
Is that paid?
Yes.
Okay, so because you seem to have quite a nice load of indicators on that.
Yeah, it's paid.
Do they have time by degrees on the TradingView?
No, unfortunately.
No. Okay.
Another software, which is very expensive.
Right.
It's something like $5,000 just for the
software.
Oh
wow, goodness me. But
so I wouldn't be recommending that, but it's the only one
no. But I was going to say about Deep Yellow is a good example of a chart that kind of like has exploded in one area without testing where it came from, and it kind of feels like it needs to do that. And it looks like there's a bit of an unwinding of positions going on right now with that. And I feel the same when I look at any chart. Really, I don't like it when it doesn't have a look where it's come from. And this is one of the reasons I expect the FTSE to have a little rally. This is one of the reasons that, even though I like things like the CAD Swiss for some upside, it just hasn't managed to come back into the base. And I wonder whether we float around here for a little while, maybe create an inverted head and shoulders before we get a really good move later, maybe later in February, that we can really start looking at this one, because it does appear that there are signs that this one's turning around, and it's right across the board. You know, as I say, you know, you look at the pound Swiss, it's exactly the same story, where it seems to have broken maybe this level here. It's quite steep, but it feels like it needs to really create a bottoming pattern, and then we can see if we can ride something to the upside against the Swissy.
Well, I think Kiwi Swiss and Aussie Swiss have pretty much done that. Double bottom, higher low, but still potential. It's not necessarily there, you know.
Yeah, and this is the challenge, isn't it? Is that you know, that the signs and signals are one thing, But timing is the key really for any of this, and it's going to be the challenge for everybody really. You know, how do we pick the right time to kind of go with this? Because it does look, by all intents and purposes, that the Swissy may well start bottoming out. The one good thing about something like this is that, you know, if you were really comfortable trading it, you could probably put a trade on and wait because of the positive swaps. You know, you're not going to get hurt with wide stops on this one, just to kind of build a longer term position. So there is sort of some.
That's exactly what I've done. Yeah.
Yeah, I think that makes a lot of sense to me. But yeah, that's
But
me,
you know,
mate.
that's almost sentiment cycle to me as well. You know,
Yeah, yeah,
it could well be the aversion point. It may
yes,
not, but it could well be.
yeah. I like it. I
And if it
like it.
is, happy days. And you know, we said the same thing when CAD Swiss did exactly the same thing, and
Yes.
you know, gave us a base, looked like it was going to give us a higher low, and it did for that particular time, but it couldn't sustain it.
No.
And look, if you don't take these trades that are on offer when they're really at their absolute best price you're going to get on them right now, in my opinion, that is,
Yeah.
um, with a sound reasoning, a sound technical reason to actually get into them. You, you've just got to have a crack. You know, you don't put the house on it, obviously,
Yeah.
because if it does reverse, you're going to have time to build a position.
I agree. Do you know what? What's interesting about this stuff is that the the news and data will inevitably turn after the move, because there are going to be sort of, you know, speculators that are going to be really keen on this and thinking, actually, um, it's value, as you just said, it's value down here, and it's well worth kind of, you know, putting the position on and getting the value, and then allowing the data and news to catch up. So even though we've got this concern right now globally of what's going on with the market, um, it doesn't mean that things continue to be a sell, because at some point they become fair value for what's expected anyway. So if we are sort of kind of seeing a bit of a base form in the Swissy, I guess the real kind of question is it going to go lower than the lowest point? You know, how much lower can it go? I guess is the key here, because if more data comes out and it's still negative, and it's able to hold this area, then really the only way's up. You think the only way from there, that point, is up. And where is this going to be in a year's time? Because it's going to be a you know, one of those kind of trades that you look at and think, well, you know, if by December 2024 this is all the way up here, buying down here and holding on to it makes a lot of sense, because of the swaps, purely because of the swaps. Is, you know, the only reason. You know, you wouldn't want to
And
trade in the opposite
and
direction.
if you didn't take the trade, you'd be saying, "Oh, that was an easy trade.
Yeah,
Look at it,
yeah,
double bottom, higher low. How can you miss?"
yeah, yeah, yeah. I guess if it manages to break this pattern down here, then it looks on, doesn't it? If it can get out of that what looks like a some sort of triangle pattern down here, then that looks on all of a sudden for upside. But I like it too. I like the Swissy generally, just because, you know, as I say, that the swaps are really good. This is a triple bottom down here, mate, as well. I mean, it's and a good bar last week.
Yeah, that's what I said. It was tough for me to choose
Yeah.
between Aussie
I mean,
Swiss and
what do you
Kiwi
got when
Swiss.
you're looking at a trade? I mean, you know, what do we need? How much indication do we need to see when we assume there's value? You know, if we sort of assume there's value down here, how much indication do we need to get that it's well worth going for it? And if you don't, you know, if you don't have to put on hardly anything down here, because the room to the upside is so vast.
Yep.
You know, it's possible that it comes and tests that low. That's a pretty extreme point, though. Yeah, I mean, I suppose what's going to drive it? What's the reason for it forming a base here? I suppose is the other question.
Well, we're swinging in midair.
Yeah. Let me just see what it's got
And
so
the
much
only,
room.
my only real concern, if there is a real concern, because I don't care, care's a bad word to use, don't care. Of course, it's a concern if it loses, but I think the potential reward
Yeah.
versus the risk here is
Yeah.
just crazy.
Yeah. Yeah. Agreed. Agreed. And that's what we're looking for, isn't it? For some value.
Mm.
Because you don't need many of these throughout the year if you get them right. I quite like that line. That looks all right, mate. That's tested it a couple of times from above. 3 times now from above.
Yeah.
I quite like that. And when you look at it there, it actually looks like I mean, there's going to be this is the that looks good too. I mean, that looks pretty all right, doesn't it? On the Aussie, it does depend where you draw your lines, as I say, but it's really a kind of it's a question of sentiment. You know, is this done? Because if it is, you don't need a lot
Like I
to
said,
drive this
it
higher.
looks a heck of a lot like a sentiment cycle to me.
Yeah, yeah, yeah. Well, I'm going to keep my eye on it. Um, I I still like the pound Aussie, but the thing with the pound Aussie, I mean, you know, I'm really sort of looking at the pound Aussie because of the information that's been provided by seasonals and COP. But with the pound Aussie, this needs to kind of give me. It might start to look all right at the top of the hour. I might well take a trade on here with a pound Aussie. I like it as a
Mhm.
trade. It could do with getting above that point probably. Don't like that one so much, but I like that area there. Could probably do with getting above there and staying there, and then I'll take it on. I'll take it on with stops down there. So they're the ones I'm looking at, mate. Really
Yep.
pound Aussie long. But I'm with you on the Swissy. I have to say, when I looked at the you know the background data, if you like, you know, COT data on the Swissy was flat. And you know that's a little bit concerning. It's had a huge run up, and we've seen you know everything else sell off against the Swissy. It's flattened down here, but so far we haven't seen the the speculators really kind of come in, and we'd want to see this pointing down. I'd want to see it pointing down before taking on the Swissy trade. So I'm not ready yet with the Swissy because of purely because of this, really. And you know, nothing else is really taking it in the opposite direction. The euro is the opposite. Euro is starting to look quite weak here when it comes down to the COT data. So not that I'm going to trade the euro, but because I'm after the Swissy, but I just want a couple more bits of information before I trade it.
Yep. Fair call. I get it. I've got nothing more than I did at the outset, mate. Really, at the end of the day,
Cool.
it's what it is. I think the sentiment in the market is really interesting. I was expecting the market to go risk off last week. Didn't really happen.
Yeah.
Dollars come off a little bit. That's a good thing for mine. That gives me another opportunity to buy it when it pulls back just a little bit further, because I think there's probably dollar strength for a little bit yet. Um, that's really all I'm seeing, and those opportunities, you know, trading off the bottom.
Yeah.
That's
Do
about
you
it.
know, mate? Talking about that, that the dollar strength that does kind of drag me towards the gold trade. I think that there's some
Oh, yep.
downside potentially coming for gold. You know, there's definitely a trend line along here that might be as far as it goes, but I think there could be a pullback in gold. And it's a big problem for gold because of these areas here. You know, this really could, technically speaking, this could still be looking at a big move down.
You won't get an argument about that from
No,
me. That's for
no,
sure.
but obviously, you know, everybody, my biggest problem with gold is that everybody's talking about upside.
Have been for a long time as
Yeah,
well.
yeah. Which
Just getting a message from George as well. Nothing ready to go. Okay, he's just about to log in, have a chat
okay,
with
cool.
us.
Okay, fantastic. Yeah, and because everybody's talking about upside, it kind of makes me think, well, there's probably some downside on the way.
This it's the thing that's starting to concern me about uranium
Yeah,
as well.
yeah, I know what you
Everyone's
mean.
starting to talk about it. That
Yeah,
concerns me. I should have shut
yeah,
up, shouldn't
yeah,
I?
yeah. I know what you mean, mate. But interestingly, even though they're talking about it, I don't think we're seeing huge evidence of retail froth as yet.
No, it hasn't happened yet. No.
And that's going to be the key, I think.
Yeah, I think we can hodl for a bit yet.
Yeah, yeah. We'll see what it's like in 12 months. That's what I'd really like to do.
12 months. Ooh, I hope it keeps going for 12 months.
Oh, it'd be
That'd be
amazing,
good.
mate. I mean, if
Ooh.
some bumps in the road, inevitably, but I wonder whether over the 12-month period we actually see some upside, and then 24 to 36 months we really see the market kind of build. But yeah, I think this year could be another solid one.
Cool. Now he's a solid citizen. G'day, George.
Gents, how you doing?
Yeah, we're well, mate.
Top of the world, mate.
Super, super. Thanks
What's
for
happening in yours?
nothing much. Can I share the screen? Just tell you what I'm looking at.
Oh,
Yeah.
You probably can if somebody
Someone gives me the
whose name will remain anonymous, but his initials are Jeff Pine, actually does something and gives you the power. That would be good. Yes. There you go. You should be right.
excellent. Well, first, thanks for indulging me, not just to sit in the beginning so that I can just watch and see what's taking place.
Too easy.
I think the most immediate thing that I'm interested in is what's happening with the indexes. So I've got all the 15 markets I look at. I know I primarily talk of indexes, but I've got gold and currencies in there. So if you ever look at this top row, that's the indexes. That's I got the Swiss 20 here. I mean, the past 4 candles, the bears are seeming to start to take control of the market. I'm saying seeming to start to because we are in a trading range, right? So they need to break beneath that green line, which is a high of Friday. And once we get beneath that, some trend candles, I'm going to be interested for pullbacks to short. So that's DAX. UK, a little bit more work to do. I mean, DAX has got much better bodies. Just like if you look at Swissy, not Swissy, Swiss 20, good sell-off so far. But I need the next couple of minutes to see this candle closing beneath here. A little bit of a follow-through. Then if I get a pullback and a reversal, I'm definitely going to be looking to take a short. So DAX 30 and Swiss 20 pretty interesting. Need a little bit more selling on UK 100 if at all. Trading range on Nasdaq 100. Dow Jones just failed breakout to bar reversal, but again, not enough. Looked like there'll be a lot of selling pressure, but we don't seem to be getting that. So I just need to wait a little bit. Then everything else, there's nothing interesting. Gold, a bit of a trading range, bit of a flutter, trying to break above that early trading range. Nothing's happened. CAD, something, pound cable, selling off, but nothing distinct for me to say, hey, I'm going to jump in. The yen crosses, probably a bit of influence what BOJ might do tomorrow. So, euro and yen, I might keep a look at them, and sometimes you might get some trend kicking in today, still far away from the announcements. Aussie, euro Aussie, again, still beneath my 10 EMA, so selling off. But, I want to see these big trend candles and then a pullback for me to get interested. So we'll see what happens. We've got 10 seconds to go. So I think, unless something pops up in the next few seconds, Swissy is setting up nicely and we're closing now the trend candle. Good. So I'd love to see a little bit of follow through. Doesn't matter how, as long as it's a trend candle, then I'll look for a pullback. That's not follow through, but let's see. We might still get a small tail, big body. So that's my present thinking, gents, at the moment.
Interesting, George. So you'd like to see, I suppose you see that the Dow Jones at the top there. You see the green bar that broke to the upside. That
Yes.
kind of bar there. Would you call that a kind of trend bar in the opposite direction? You know, sort of it's got a shaven head and finishes at the top. It's a breakout of the area. Initially, would that have been something that you'd say, okay, upside?
Yeah, that's definitely a trend bar. That's kind of what I'm looking at. So when I say trend, that's when I see tails must be small
Yeah,
for bull candles. I mean, if you get a tail at the bottom, that's fine. It's low test as long as the body is bigger. That, even though it's shaped, is a beautiful trend candle. All I would have
yeah,
wanted is a follow through of that. I mean, something like that, low test, fantastic. As a follow through, that confirms a breakout for me. You know,
yeah.
breakout candle, breaking out of something, follow through. Then I just wait for the pullback.
Mm.
So that's kind of the thinking processes that I got there.
And is that because one bar is not enough from your
One bar is
experience?
not enough. One bar is not enough. If I jump in there, you could just get trapped into the wrong direction.
Yeah,
If we both put a bar in and then a follow through, that's good enough to increase the probabilities. Follow
right.
through, that's the yeah. Then I
Interesting.
wait for a bit of a pullback, get the reversal set up, and then we go for higher probability.
Would you want to pull back over a particular period?
No,
Okay, so
it doesn't.
any pullback. It could take
Any
a
pullback,
day.
yeah. It could be, a bar, one bar, could be two bars. It could go sideways, trading range. That's also a pullback. And we start to get a breakout above that, and I'm jumping in.
Yeah,
Yeah,
interesting.
so there's no duration to that. Once I've seen the breakout, just depends what the market gives as a pullback,
Yeah,
and that's fine.
yeah. Because it's a challenge. I mean, that's the major challenge is how are we going to pick a direction? And I guess if we wait, what I like about what you're saying about those bars is that it suggests. I know it's not absolute, but it suggests that it's a breakout on volume when it's a solid. When it's a very very strong looking bar, it looks like there's some volume kind of in there as well.
Yeah, I mean, so the bulls own most of that. I mean, when you watch it, it just goes up and down. There's a lot of transactions in it,
Yeah,
but just control that. But then I want to see them do it again.
yeah, yeah.
And,
Just
and,
make
and
sure
once
that yeah,
it again is confirmed, then I'm not worried about the bear candle coming up, unless it's a huge bear candle. So let's say, see this candle here.
yeah,
So let's say we had, we didn't have a tail on top, and we had this breaking above that one, but then you get a huge bear candle reversing the two candles. That's not a pullback. That's like just wait and see confirmation which way we're gonna go.
yeah, yeah. Interesting, mate. Interesting. How you sort of actually dissect the information that on the bar, just purely from the body and the tails, really, isn't it? You want to see a certain
Yeah.
size body and make sure the tails aren't sort of hugely different, from the size of the body and stuff like that. So really interesting way to look at it, and that's what price action trading is, I guess.
Yeah. And it's the size of the body in relation to the height of the candle, right? So it doesn't have to be a huge candle. It could be a small candle, but if the body is bigger than the tail, fantastic. That's a trend candle. Happy with that. So that's the kind of thinking about it. Just want to see the
Yeah,
confirmation. I mean, like,
yeah,
if we close down here on Swiss 20, so we've had, 4 trend candles, then I'm just starting to wait and see if I get a pullback, a decent enough
yeah,
pullback. And if I get a huge bull candle, then it changes the structure of the market. But if it's a pretty reasonable pullback, staying within these parameters, and I get a low test, bear low test, tail on top, bear body, that for me is a signal to trade and a high probability trade.
brilliant, brilliant.
Sounds like you're setting up for a trade, mate. We better let you go.
Yeah, I'm just gonna. I mean, it's looking like setting up, but you gotta just give it a few more. This is beautiful. There's no, I mean, the tails are there, the bodies are bigger. There's no dodges, unlike we've had on DAX. Since we spoke, giving us a dodgy there's a couple of dojis. So those are big warning signs just to get more confirmation before you try and sell. I mean, look at S&P 500, going down, but bodies are not showing strength.
Not real sure, are they? Mm.
But the Swiss is showing some strength. So I'll keep watching that and see what we get. Swiss 20.
All right, mate. Actually, I'll ask Ash as well. What are you? Your presentation in Bali? What are you doing?
Oh yeah, great question, mate. I'm probably going to be focused right now. My thinking is that I'll focus on the COT data and the seasonal data, and then the fundamentals. So the three of them kind of in harmony. And how I use them to determine what I want to do for the week. So as I say,
Cool.
like this week, I'm looking at the pound Aussie, and I guess it's how did I arrive at that particular theory.
Yep. George, what's your thesis for Bali?
It's really about the unfolding price action as the day goes on. So what I want to show the guys that the daily candles are more useful to me in hindsight. Oh, this is what happened. We're in a trading range, we're in a breakout, etc. But to use that going forward would just cloud the thinking. So on the day, I mean, like today, I didn't even look. Friday, I know what happened, but today I didn't even bother look at what happened. What to look at. I'm just interested in what's unfolding. When the day ends, because okay, let me correct that. I know we had rallies on Friday, so that's a bit of cheating in the exam. But if I hadn't had that, I would have just opened the charts as there and fresh and say what's unfolding for me. End of the day, if we got bull trends and confirmations, I want to see, is there any level of resistance coming up, from the left that I must just make sure I've got marked on my chart. Or if we had breakouts that might not give us measured moves, that I want to have on the charts. And that's as far as it goes. Then I want to just pay attention to what's unfolding right from the open. That's of 95% importance. And then we'll talk about some of the, like now at the open, if you try and jump into this every time you see it, you're going to end up with some problems long term, without a pullback. So you just want to kind of learn to wait for a pullback, and you'll still be able to get a good return because of the measured move principle. Right? So if we get a breakout, so there's a high, low, a bit of a trading range there. So if you get a pullback and you get a setup, there's still that opportunity to get to a measured move. So there's no point rushing in and then agonizingly managing your trades. Rather wait for higher probability and miss out, what always looks good in hindsight. Like those kind of principles, what I'll be talking about.
Okay, FOMO, interesting. All right, you probably may not be talking to me after my presentation.
What are you doing?
It's called the 10 Commandments.
Potential numbers.
The 10 Commandments.
Oh, the 10. Oh my goodness! I better come properly cleansed in case you can.
You may not. You may have to leave the room, George. Anyway, it's meant to be educational, not distraction of the thesis. It's meant to enhance it rather than destroy it. So, but there will be a little bit of a few twists in there. I can tell you that much. Can't tell you much more though.
They're always entertaining, mate. I think we'll look forward to your one probably more than everybody else's because they're always entertaining. Got a tune for this one?
Yep,
I'm sure you
Brilliant.
Mm-hmm.
Oh no, I can't. Is called Crossing the Nile or something.
You're not too far out.
Brilliant.
All right, we better get out of here. Nobody's got any questions for George, who will be, of course, doing his 15-minute show on Friday. What time is that, George?
12:30 my time. That's 6:30 p.m. Sing. Yeah, for 15 minutes. Yeah.
All right, happy days. We will catch you next week. Ash, go and have a sleep, mate.
Thanks, mate. See you soon, guys.
Have a great week, everyone. Bye-bye for now.